Welcome to Happy Investing for 2026. A look ahead of what the new calendar, the new budget, and of course, what the future holds for equity markets in 2025. We've had a very, very painful time for the last 15, 18 months. Yes, the last 1 or 2 days are looking better. That might be because of the Santa rally and the onset of the pre-budget expectations. But by and large, it's been an year that is mostly forgetful. Let's get a new view, a fresh stance for Dalal Street. Joining us on the show is Mr. Prateek Agarwal, MD and CEO at Motilal Oswal Asset Management Company. Mr. Agarwal is a veteran for the last 3 decades or so. He's worked variously with SBI Capital Markets, ASK Investment Managers, BOI Mutual Fund, as also BNP Paribas, and has a very, very strong grasp on equities in particular. Namaste Prateek ji, a very warm welcome. How do you look at 2026 after a very, very painful past 12 to 15 months?
If Hindi is good, I'm happy to do it in Hindi. But I was thinking today, gods have given everything. What do I even ask God? Beginning of the year, January of the year, the only thing that was mingling the minds of investors was valuation. Now we have had, like you say, a forgettable year in which earnings have moved up on the larger cap side 10%, on other spaces maybe higher, on the fast growing niches even higher. Okay, and practically everything barring a few spaces in the index have not held. So valuation correction has been immense. We are no longer the most expensive market of the world. The US probably takes that baton. And versus other emerging markets also, since we are amongst the worst performers, valuation correction has been of a very high order. So if you look at a Chinese market and us, valuation correction could be of the order of closer to 35%. So, one thing that caused people to not look at equities in the early part of the year is also now okay. And then during the year, we have got a tax cut in the budget. We have got repo cuts 1.25%. We got a GST cut. Now globally, bankers have started to cut rates and Fed has started to increase money supply. Oil is down, etc., etc. तो वही मैं कह रहा था, मांगू भी तो भगवान से क्या मांगू, कब तो दे दिया. Now, this is a period, just like, on the upside comes a period when you get a negative news and during the day 1%, 2% correction happens and people say it is already discounted. In the same manner, when things are not looking good, a very good outcome may happen, very good, for example, quarterly result may happen, and the stock moves up for half a day and it comes down. It just gives you the viciousness of the selling pressure. 2, 3 reasons why it is there. One is, if you see, in January, for example, you got a broad market collapsing, and over the last 1.5 months, you saw the same stuff. In both the things, if you look at how the rupee has behaved, rupee had weakened. So when rupee weakens, people who are levered, they incur large losses. They have to take evasive action. They close their books and the breadth of the market reduces considerably. It almost always revives once the rupee stabilizes at whatever level. Stability is required. So I think some bit of that is happening, and plus the fact that there has been a huge pressure of IPOs, it's acted as a huge, nice safety valve, took out, let's say, excess air in the balloon. But just think of it, in spite of all the money that has been raised from the market, yet markets have held their levels, at least from the indices. I am told India is a country which is seeing highest fundraise as a percentage of GDP, in the world, So that kind of gives you the amount of positivity which may be there in the market. And the thought is that if the peak fundraise period is now getting behind us, for the time being, it will be peaks and troughs. And if a trough is coming in front,
Right.
then
Let's.
the secondary market breathes in that period.
Right. Mr. Agarwal, let's just look at what the future holds. One of the most aggressive new age AMCs is Motilal Oswal AMC. You manage somewhere like 1,72,000 crore rupees, and you have a very, very aggressive view on many companies that are from the new age, whether from the internet space or from the EDM space, where you hold large stakes. For fresh money that is coming into MOSL AMC, what are the plans? Where do you want to deploy that money, and what are the reasons thereof?
So let me do it slightly differently for ease of understanding of your viewers. Okay, over last 30 years, okay, we have seen very good outcomes in the market a few times. For example, in 90s, software companies, were tiny. That was incidentally a period when India had pledged gold, so economy wasn't doing too much. Software new space happened. Tiny companies grew very strongly for 10, 12 years and created, generally speaking, very good outcome for the clients. Mind you, it wasn't a straight line. It had its ups and downs. In the same manner, from early 2000s to 2015 to 20 period, another new space which started off, again small, new space will be small, and generated huge wealth was private sector banks. Uh, and similarly, if you go ahead in 8 to 20 period, now few names are legends, but let me say, uh, life sciences companies, some consumer companies, some financial companies created the same kind of good outcomes. Now, if you take away the common thread, what you will find is the common thread was super high growth in the context of times versus the index, sustaining for great length of time. Okay, and if one has understood it, then come to the present and see where all you will find this combination of super high growth sustaining for great period of time. So that is the combination that to our mind is required for great outcomes. We are not a house that wants to do plus minus index. Okay, now if you think over the next 5 to 10 years, EVs have a particular journey that they will take in the marketplace. GLP ones now newspapers have started to cover will have a particular journey. Electronic manufacturing, renewables, capital market plays, luxury, and so on. Wherever we get this combo, you should expect to find those
Yes.
combinations in our portfolios with some of the best representative of the theme that the manager thinks exists. So this is what it is. So when you do this,
Ji.
what you find is an product where the active ratios may be 90% plus, and super high
Huh.
on earnings growth quotient.
Ji.
So
Okay.
this
Uh,
is yeah.
uh, Prateek ji, when you look at the crystal ball in 2026, do you expect a secular uptick in the markets, or will it be pockets of gain the ones that you have just described in your previous answer, and broadly the markets will be stagnant to down. What is the prognosis for the broader view on Dalal Street?
Things are getting better. If you look, so we have just been through a pretty decent rupee depreciation. Whenever the currency depreciates, for everything which is there in the country, the ability to make a higher margin increases. Okay, so broadly speaking, that's a big tailwind to everything that is there in the country. Let things stabilize, it shall manifest in numbers. Now, even without it, while we recounted many fast-moving spaces, stuff that we don't do is also looking better. So, for example, the world is so focused on metals. So silver and industrial metal has been doing well. We as a country produce decent amount of silver, so there are plays. Same way, bauxite kind of stuff. So copper, we don't do too much copper, but all of these stuff, suddenly the metal space has started to find traction in the marketplace, and the players will benefit. So metal mining, I mean, we don't go there, extremely volatile, but definitely broadens the market. Banks may have a quarter or two of margin squeeze once more, because we have seen a rate cut from RBI, and maybe one more is expected. But on the flip side, the NBFCs should see some lower borrowing cost, and hence better margins in the interim. So, with rupee depreciation, a positive virtuous cycle definitely kickstart. Markets take some time to reflect it, because if you are an FPI sitting out of the country, when you sense rupee depreciation, you will actually pull out monies. That probably has happened. Now, if rupee stabilizes, we should expect better broad market performance. It would help. It helps that
Right.
the policy environment is very good. It helps that our relative valuations have also corrected quite a bit versus other EMs also. That increases our chances of a good outcome. See, in our business, it is never a straight line. It is always ups and downs. We always talk possibilities and probabilities, but probability of a good next period outcomes have definitely improved versus where we were a year back.
Right. Sir. Let's now also look at the pain points of 2025 and what do they hold for markets. So, mid caps and small caps investors have been in terrible shape, and they continue to pour in money on a monthly basis as far as SIPs are concerned. Do you think that those new highs or fresh highs will be revisited in 2026, or you still have more pain in store for mid cap and small cap portfolio holders?
Yeah. No, so let us look at where earning momentum has been stronger. So last quarter, mids delivered broad-based better earning growth versus large. Smalls overall did a better earning growth, but the breadth was less. It was driven by a few names, so narrow breadth. And even if we look at last few periods, something similar has been the trend. We don't think too much large, mid, and small. We think growth spaces. Now, if you look at growth spaces, so think of it, one hospital maybe large cap, everything else is mid and small. In EVs, everything is small, actually, not nothing is even mid, pure EVs. Renewables, it is mid and small, nothing is large, and so on. So, If you are looking at growth spaces, we think with interest rates going down, cost of capital reducing, liquidity internally and globally slated to improve with a huge tailwind for growth spaces, and sooner than later they should start to perform. See, a mid cap may reflect a stock which has not performed in the larger cap space and has dropped into mid. One should stay away from businesses which are past their prime. Similarly, in one space, there can be a stock which has been there for 20 years, again, not happening. So, my whole thought is that don't look at caps, work with the belief. If your belief is that market ultimately follows earnings growth, spot the growth spaces, look at good companies in the space. Today, very few of those companies have reached large caps. They are still the best one, number two players may still be mid caps or maybe in some cases small caps. So be it, be with the leaders of the space. So that is a thought you will see pretty strongly
Okay.
manifested in our AMC.
Okay. Prateek ji, one view on silver and gold on a regular basis, this space is hitting new highs. I know you don't like commodities as a fund house and therefore have largely stayed away, but I'm sure the AMC offers both silver and gold ETF, so that is more or less covered. But for equity fund managers, because of silver and gold, it's been a very, very painful time for the equity side because money has moved that side. Now, what is the prognosis? More gains for 2026 for silver and gold, or are we looking for some consolidation at least?
You see, gold is a store of value. One should see it as a currency in some form. Silver to me is an industrial metal. Now, gold, the narrative stays the same, with the less trust that people have on each other globally these days. You want something which you can store internally. So, all central banks have been buying gold and shipping it to their own countries. Okay, no longer they want to even keep it abroad. So, that is the sense you get. But that narrative has been there and there. It doesn't change. So whether one price is good or another price is good is very difficult to say. What is also happening is because there has been a price move, it attracts financial investors, and suddenly globally financial investors have gravitated towards gold, and that has created its own demand. Now, if the precious metal moves sideways for some time, maybe this excess demand that has happened will go away, and some bit of a correction can then be anticipated. So the narrative here is all linked to store of value, uncertainty, etc., etc. The narrative, a month back, 2 months back, today, tomorrow will stay the same. Now, silver is slightly different. To me, it is not a precious metal, it is more industrial, and more use cases of the same is emerging, which is probably putting some pressure on demand supply and causing some improvement in price. Yes, it is also a traded commodity on the exchanges. Yes, just because the price seems to be spiking, there is a financial asset demand also on silver, and it can have its own consequence. Now, gold is a deeper asset class, silver is not as deep. Silver price spikes have typically been way sharper versus gold. So one has to keep that in mind if
Right.
one is looking at silver. But if you see, even copper has been moving up a bit, even aluminum has been moving up a bit. So it is lots to do with newer
Yes.
age metals.
Correct. Prateek ji, on this very somber and largely positive thought, let's call it a day. Thank you for your time. Here's wishing
so
you
much.
all the best for calendar 2026 and the new year. May the sun shine brightly on all unit holders of MOSL AMC. Thank
And
you for
on
your
your
time, sir.
viewers, have a great year.
Thank you. That, ladies and gentlemen, was Mr. Prateek Agarwal, CEO and MD at Motilal Oswal Asset Management Company. Thank you for watching. There's a lot that's happening on BTTV. Please be on the other side of the break as well.
A sweeping advantage for the ruling Mahayuti in Maharashtra's crucial